Alright, welcome everyone to another edition of Green Shoot series. My name is Gabriel, your host once again. But joining me today for this very special edition, we also have with me the very lovely Jill.
Thank you for the kind intro. Our wonderful audience joining us should be familiar with Green Shoots as a monthly meetup for the global fintech community to discuss critical topics trending in fintech and the digital economy. Today's edition will be an exciting one. It'll open with a special leadership conversation with our own Sopnendu Mohanty and a close friend of his, Stephen Bird, to set the tone. What else do we have on, Gabe?
Wow, quite a bit actually. We then take a bit of a pivot into the launch of the Singapore FinTech Festival 2021, organized by the MAS, supported by ABS and Constella Exhibitions. Pat, who some of you know, is our captain, Team SFF, will also be joining us here on stage to share further in-depth details for this year, followed by a short sharing discussion by our sponsors and partners. Basically, folks that have been with us on this journey from nearly the beginning. Did I miss anything, Jill?
Yes. We then have a couple of VCs and fintech unicorns slug it out in a special fintech fight club session that is sure to pack a punch. Let's get the program going then, shall we?
Indeed, time to shine the spotlight on some of the real stars.
For the first session today, we'll hear from Stephen Bird, who's formerly the CEO of Citi's Global Consumer Banking and a Citigroup veteran of more than 20 years, and in September last year has stepped into his new role as CEO of Aberdeen. Moderating this session is a man who needs no introduction, Sopnendu Mohanty of the MAS. I'll hand the stage over to you, Chief.
Hey, thanks, Jill. Thanks for the lovely introduction. Hi, Stephen. Good morning for you. How are you?
And it's great to be digitally in Singapore. Quite emotional for me to be connecting into Singapore. I mean, I wish I was there, but it's a thrill to be part of everything. So it's thank you for the opportunity.
No, Stephen. I think I was thinking about what kind of question I'm going to ask you, but I think let's start with some kind of a pattern you have developed now. Anytime you land to a job, there's a crisis coming or this crisis has happened, you just land to the new job. Same happened for this new CEO job. You just landed in right through the pandemic crisis, empty offices, businesses struggling, and your famous rebranding. Please share with us the whole experience you have to go through right through the crisis.
Yeah, well, there is a bit of a pattern for sure, Mohanty. It's interesting. I came to Singapore 23 years ago during the Asian financial crisis. You know, back when we used to talk about tiger economies and the Thai baht had just devalued and contagion was spreading across the region. But of course, what happened? There was a tremendous V-shaped recovery in Asia. Asia became more resilient as a consequence, and that whole experience was packed with learning for all of us. And now fast forward, here I am. I joined, what was Standard Life Aberdeen is now Aberdeen, and I was fortunate that I came in a couple of months before I officially took charge. So I had a 2-month period where I had a good handover and transition with my predecessor, Keith Skiok. I also prepared for regulatory approval. As you know, we have the senior manager regime here in the UK. But what I did is I used that time to really study the business. Now, because everyone was working from home, I had to put in an exceptional effort to be able to meet with clients virtually. We actually had a little bit of respite from lockdown in the middle of the summer, so I actually got to meet colleagues directly, and so I met colleagues, clients, of course the board, who gave me a lot of input into what was going on in the company. But what I found was, so the company already had addressed working from home digitally, which was a good thing, and my predecessor did a great job in making sure that the company could continue to function. But then I looked at the real issues, and the real issues were that two great companies had come together, or were coming together, Standard Life and Aberdeen, different companies, different legacies, different strengths, different capabilities, and we really had to accelerate to one team, one identity, one team, one tech infrastructure. And the way to bring a focus to all of that was the client focus. So what we did is we focused on client-led growth. And throughout my career, I've always found that when things look complicated or things, are a puzzle, the one true north is always, why are we in business? Who buys our products and services? What do they think about us? And what are their choices, i.e. who are we competing with? So I think when thinking that way, bringing that clarity to client-led growth, and what I discovered was, I actually went to our single biggest client first of all. So we have a very large client with Phoenix Group, the UK's largest insurer. And what had happened in 2018, long before I came here, the business had decided to embark on a journey of not being a life and pensions company, but being a global asset manager, an investor. And they sold the long-term life and savings pensions business to Phoenix. But in so doing, we licensed them the name Standard Life, but we kept using it. So we were still Standard Life Aberdeen, and life inferring a life company, but our largest client was a life company. So when I went to that relationship, myself and their CEO, Andy Briggs, figured out a way to recast the relationship, simplify it. I sold the brand to him that he was exclusively licensing, and that created the path for us to have our own identity, to be Aberdeen. So now our brand doesn't advertise that it's two companies coming together. It's one team, one dream, Aberdeen. And we are a global investor, and we are doubling down and making sure that our people, process, and technology deliver great services. We're bringing clients and content together. That's the mission that we're on.
Stephen, before I get to the next question, were you worried that you picked up a new job in the wrong time?
Well, when I first came into the office and there was nobody here, I wasn't worried about infection because there was nobody here, and but I started. You say to yourself, so okay, so now I'm in charge. What am I going to do? and with all of these things, you got to start breaking down the problem,
sure.
and you got to go towards the challenge, and you talk to people who have been on the journey. And I had to rely on colleagues who really understood the history, and they could explain to me the challenges and what we were working on. Now, the business already had 4 programs of transformation underway, and I knew, look, this is a moving train. It's very important that these programs are delivered cleanly. So don't mess with them. Make sure they get delivered cleanly, and don't be disruptive. So when things are working well, then you support them. You create the conditions where they really can be delivered. So, but to your question, absolutely, of course, you're on a massive learning curve, and to add to that, I hadn't lived in the UK for 23 years. I've lived in Singapore, Japan, Latin America, back to Singapore, then the last 5 years in the United States. Now, I did know both predecessor companies. I was fortunate that I knew Standard Life because, in fact, Citi runs the middle office. So the whole security and fund services, fund accounting, middle office is run by Citi. So I had been here through the relationship and actually had discussions on digital and accelerating digital development with Standard Life. And then I knew Aberdeen because Aberdeen had been in Asia for the last 40 years. We've got a fantastic team in Singapore. We've got 500 folks that are excellent investors and investing in China A shares and smaller companies and developing sustainable investments in Asia. So I knew the 2 predecessor companies. But so the real opportunity was, let's prove that bringing them together could fulfill its potential. And that's really why I came here.
Good. This leads to a next interesting question, because this is not my question. In fact, one of our ex-colleagues, Navin Suri, gave me this brilliant question, and I'll try to phrase it the way he said. You are in a very unique position, Stephen. In Citi, your business was distributing, one of the business was distributing mutual fund. You are a distributor. Now in the business, you are the manufacturer of the product. You are going to manufacture those mutual funds. I think a lot of questions start coming up. The whole unfinished agenda of end-to-end integration, how fintechs can plug in to ensure that the whole value chain get connected. You have moved up the value chain in terms of the product design. This is a huge, huge opportunity for you to fix this end-to-end connectivity, end-to-end design for at least for once.
Yeah, you're completely right. Thank you to Naveen for that great question. I mean, he's got completely the right perspective on it, because clients don't think, well, this is distribution, this is manufacturing. Clients are looking for a solution, and simply delivered. Speed and simplicity. Remember in City, I was always, speed and simplicity in all we do. And I even developed, if you think of the word speed, I developed this thing. The S and the P was for straight through processing. The 2 E's was for end to end. Exactly Naveen's question. End to end design. You've got to do end to end design. I talk about going from the customer synapses straight to our cloud. That's what you got to think, end to end. And the D was digital. If it's not digital, and if the data is not alive and analyzable and transferable, it's not the right design. So that is exactly our opportunity. Now at City, of course, we had the fantastic opportunity where we built a powerful City Gold franchise, and then we found the segment in the segment, which was City Gold Private Client. And within that, what we did is we did use great technology to ensure that we could bring curated content. So what we did is we said, look, open architecture, curated content. It could be Schroders, it could be Aberdeen, it could be Fidelity. Now, what we have this opportunity to do in this business, there are really 3 pieces within this business. And to explain this, the whole business was just being run as a single entity when I arrived. But when I looked at the buying behavior, it then became clear there are 3 businesses. There is the global asset manager, that's the investments business. But we have an advisor business, and you think of that is a business to business platform business. So for example, here in the UK, there are 5,000 wealth management firms. So it's a long tail of competitors, and they employ 27,000 IFAs, so independent financial advisors. They use our platform. So that's what the advisor business is. So you can think about it as business to business. What we do is we help you run your business. We help you serve your client. And you borrow institutional research and content and technological scale to be able to run your business. So that's the second business. The third business is the direct to consumer business. Now, the real skill for us, what we did is we restructured to have ownership of each piece. But of course, there's a synergy across them. But I think what we've now been able to do is we've accelerated this pace of change by being aligned to buying behavior. Now, I mentioned at the very beginning, clients and content. What the clients want us to do is to solve that problem, bring it together seamlessly, make it easy for us to be able to, so that you know me as a client, you can onboard me quickly, you do a sensible and common sense financial needs analysis. So my risk and reward calibration and my life goals and all that are done in a simple way. And then allow me to understand the right solution, the right content that's going to make sure that I'm on track for my financial goals, whether they be educating my children, whether they be to ensure that I have enough money in my retirement, these types of things. So the same challenge we had at City of how do you bring technology to bear to the problem and use technology to make the delivery much, much more simple. And that's what we're doing. Now, we have a fantastic team here. We just completed a migration to a single investments platform. So if you think about it, $700 billion of equities, fixed income, multi-asset, private markets, now all running on a single investment platform. Now, that doesn't signal the end. What we've been saying, that's the beginning of the race.
That's true.
Now we're in the race we want to be in. The first part was simply to ensure that we, am I still broadcasting? My screen's gone blank.
You're okay, Stephen?
I'm okay, yeah?
Yes.
Okay. Sorry, my screen just went blank for a flicker there. Sorry about that. So the first stage, if you like, the heavy stage of the race was to get to a unified structure. But the real race we're in now is this two-speed architecture. You know, companies that really understand how to do this, they decouple the legacy and the heavy from the front, the experience that clients get. So we absolutely have done that. So we have, you know, if you read the McKinsey reports about how do you successfully do these things, well, O and T, you'll remember it said it, operations and technology should be together. In fact, then you create the Scrum effect where you get product, design, risk, compliance, and operations and technology delivery together. We have that. And then you have this two-speed architecture where you're using your APIs and connecting into your ecosystem. The distribution piece is actually very important for us, and it was an area where we were weak. So you may have seen we've actually just done a thing with Citi and InvestCloud, where we are on the Citi digital wealth platform in Asia, and we will be in the States too. And that's addressing what was a weakness for us. We weren't really accessing what's called the wholesale opportunity. This kind of old-fashioned language, you know, sort of classic asset management, institutional wholesale. Let's talk real customers. We weren't getting access to real customers by using technology properly. And that's why we've done that with Citi. That's why we're working with InvestCloud. And you'll see us doing more of this where we expose the company and we distribute more widely using you know, a lot of the techniques that I learned and I was very fortunate to learn when I was at Citi.
You know, Stephen, this is one thing I do to the CEOs. I put them on a spot when it comes to fintech. I tell them, look, that one of the challenges fintech face, they have a wide range of solutions, but when they go to big companies, they are put on a long queue of proof of concepts. They never really get a real customer to work with. I hope I'm going to send a bunch of fintechs who can solve your processes, digitization. Please don't put them on a POC line and a POC queue. Get them some real opportunity.
Well, I'll tell you the truth that I always do. We're still too slow. We are bureaucratic. And the good thing is we know that, because if you don't know it, you're not going to solve it. So we're absolutely crystal clear on simplifying the way we operate, speeding things up, and we are working with you know, we talk about this term, and it's not PowerPoint. The new world, the 21st century, is ecosystem orchestration. Now, you and I know that is about computers talking to computers, using common protocols, doing things in real time, not batch processing. It's, you know, creating the company as like a sensory system. That's the vision, that's the goal. So we're embracing that goal, and we're getting faster, every day a better way. But we need this ecosystem. Sure. We need these friends who are better than us.
I'm going to send them, but good to have a CEO who has an engineering background. At least he understands the pain of not getting things sorted out. Well, now getting to a very serious question, Stephen. This is personally, I've been working on this space for last couple of years. You know, the whole huge pension gap, and with the changing demographic and the retirement ages are going, people are living longer, and there are impact due to pandemic, unstructured labor force. This problem seems to be growing bigger and bigger, and it seems to me that the asset managers are struggling to put a product in market which can address this pension gap. I think we got to find a way how to solve it. Any views? What's your thoughts in this? What are your thoughts in this space?
Well, first of all, it is a huge challenge. It's a huge problem. I mean, the latest numbers, if you look at the numbers, it's right now the global pension gap is $70 trillion. I mean, it's absolutely incredible when you think about it. And it's forecast to grow to about 400 trillion by the middle of the 21st century. So it's a gigantic problem. Now it's going to require the very best of all of us to address it. Now, if you start breaking the problem down, so there's an information gap. That's first of all. So we're describing this large issue, but the actual individual customers, many customers don't understand. They don't have the information that tells them, what does that mean to me? What is my slice of the 70 trillion? What gap do I have? Now, in the UK, for example, that gap is that there's about a £10,000 a year deficiency gap at an individual level that is accumulating the UK's share of that. You take the UK's £10,000 savings gap per year at an individual level, extrapolate that, that gets to about £350 billion is the UK's share of this. So think about £500 billion in the UK's share. The UK is not that big a place, 65 million people, a small island in the North Atlantic. But then you take the US and you take Europe and you take the overall challenges that we have in Asia. A real clarion call for me that this was a real issue was when I saw what Australia did. Now, you and I know that Australia is held up as a paragon of having the super program, the superannuation program, one of the best funded pension systems in the world. And Australia decided they had to go from a 9.5% gross contribution to a 12% gross contribution. And that told me the problem is real, because a very informed country is addressing it with a material change. Now, Singapore, and we shouldn't forget Singapore. Singapore does a fantastic job of it, but it addresses different parts of it. It addresses the medical issue, it addresses the work fare issue for lower wage employees, as well as the whole pension construct itself. Does an excellent job. Now, I mentioned the information gap. Break the problem down. There's an information gap. Increasing longevity. This is kind of, it's kind of obvious. Longevity has gone from about 67 years globally to almost 75. So people are living longer, going to need more money. The third thing, and you touched on it, the changing patterns of employment. Now, the UK back in 2012 did auto-enrollment. So it said, every employer has to automatically enroll. But then what has happened is many employees are in short-term contracts. There's a gig economy, and they have whole periods of their lives where they're not auto-enrolled. They're not accumulating savings. So the changing pattern of employment demonstrates that we need much more flexible and travel with you pension constructs that are on your phone. The one thing that will go with you to your new job is your phone. And you should be able to know where your pot is, and you should know whether you're on track. So this starts to say, look, you've got to, how does the problem get solved? People need to start earlier. They need to save more. They need to make sure there are no continuity gaps throughout their employment. And they need to have a clear sense as to whether they're on track, i.e., not just how am I saving, but how are my investments doing? How are they likely to do? And we're addressing this. So we just launched for Phoenix. So Phoenix are $200 billion client, 4 million pensioners there in the Standard Life pensions, and we just developed a sustainable, tax-efficient, sustainable fund for them as a DC default, as a defined contribution default fund. And that starts to say, that makes sure that today's clients who are early stage in their career are invested in the companies, the technologies, and the patterns that will win in the 21st century. That's why it's a sustainable fund. And so if you think about the circular economy, if you think about electrification, in fact, I was just I was on with our Singapore team yesterday because we've launched this Asia Sustainable Development Fund, and I was on with David Smith, runs a great team, and we were exploring exactly this. So you say, okay, you're developing a sustainable fund. I wanted to know, in our Asia Sustainable Development Fund, which companies are we investing in? I know a lot of these companies, so I wanted to know which companies we're investing in. What is our view on electrification? Because you say, well, electrification is a big topic, but which spots are we participating in? So you say, well, you could be in electric vehicles, you could be in batteries, you could be in power distribution systems and storage systems. You could be in the software, integrators for that space. And I went through with our team, and
I think we lost Stephen.
The company that is being, it's valued as a chemical company, but it's a world leader in batteries. And as a consequence, that's one of the funds, one of the companies, one of the components in that fund. So right to the beginning of your question, it's a huge challenge. It's a huge problem. We need to act to bring the right content to our customers, and we got to solve the information gap and the content gap.
Okay, well, Stephen, I think we may have a little visual problem, but we can still hear you. While you're getting your visuals up, let me ask you a very quick question on your career, because we may have running out of time before you get some questions from our listeners. I had a long question on your career, because your career is you have such an amazing run, and we have seen it while in Citi. There's one question I'll ask you, and please give us a very candid response. Every time you got a new job, were you ready for the job? You thought you could do it, or you figured out as you got the job?
Well, it's definitely the latter. I mean, there's no doubt about it. Jackie's laughing, and she was running the cards business in Singapore, and probably remembers a lot of my dumb questions. And the thing that you have to recognize, people have said to me many times, you should promote people who have got the attitude and the capability for learning, but are not actually the finished product yet. And that's when you're really going to create the right environment for talent. People can say, wow, Stephen get that job. I think I can get that job next. And that sends a fantastic message that, you get a ripple effect of, motivation and enthusiasm. So absolutely was not ready. And that's a great example of a system that is placing bets on talent. Now it's about learning velocity, isn't it? I mean, it's about, so you're not ready. You have to know you're not ready, which means you really work hard.
Yes. Well,
and you really try and learn.
Yes.
And you ask the dumb questions, and then you make sure you get the answers. And I would encourage everybody to do that. Stay humble.
I'm going through it, Stephen, nowadays. Well, Stephen, I think we have a couple of minutes left. Well, I'm going to bring a couple of our listeners. In fact, we have more than 5,000 people watching this as we speak. I'm going to bring an ex-colleague of ours to live on this call, Jacqueline Tan. I hope you recognize her. Hi, Jacqueline.
Hey, Jackie. Yeah, she looks exactly the same.
Thank you. Hi, Stephen.
Hi, Jackie.
Hi, Jackie.
Hi. So it's great.
Any question for Stephen?
Yes, I do, and if you indulge me. So it's great seeing you and hearing from you again, Stephen. And thank you for the very inspiring sharing. I think the last time we spoke was more than 6 years ago, and I have to thank Sopnendu and the SFF team for giving us this opportunity. I have two questions for you, if you will indulge me. The first, and one is more lighthearted question. So the first question I have is that with some of the global banks that have exited certain markets and focused on core markets as their go-forward strategy. So for example, HSBC exiting the retail banking business in the US, or even Citi exiting the 13 markets. What are your thoughts on the role of global retail banks and how it would impact the banking landscape going forward? So that will be my first question. My second question, which is a little bit more lighthearted, I remember you love to read, and you used to be the keynote speaker in a lot of the conferences. You would bring a book along of what you read for the day to share with the leaders. My question simply is, what are you reading now that you could share with us that could inspire a lot of the people on this call today. Thank you.
Well, thank you, Jackie. It's really great to see you again and great to hear from you. So the first question, yeah, a bit disappointed, when I see, the retrenching, so on the one hand, I get the need to always, let's focus on core markets, but the real opportunity to be able to make services pervasive, to be able to allow digital services to flow. If you have an iconic brand, that is incredibly powerful. HSBC or Citi, take the Citi went out to Asia in 1902. And as a consequence, the Flower Flag Bank, as it's called in China, has that iconic brand has got reach. So I think that the challenge for the team at Citi, and they've got a fantastic team, and most of them were part of my team. Their challenge is to make sure that we allow that brand to still thrive and use technology and delivery for the 21st century. And that's why the Citi Digital Wealth Planner, and that's actually why I'm involved in it with Citi. I think that the opportunity is to continue to be present across borders. Now, yes, the very local retail banking business is changing dramatically, and the local banks are much better today than they were, at any time in the past, 20, 25 years ago, even 10 years ago. So I can see why these decisions are being taken, but I hope that the strategy continues to prevail, to keep the reach and the connectivity, and don't lose that equity that exists in the brand and in the trust in the brand. So it's the first question. Second question, so yes, so right now I'm reading Atomic Habits by James Clear. So Atomic Habits is about those tiny little changes that you can make that make a huge cumulative difference to your life. And you could talk about it as pension saving, or you could talk about doing 10 press ups every morning. So if you do 10 press ups every morning, at the end of the year, you're going to have, you'll have done 3,650 press ups, and you're going to be in better shape. And that's actually what the book's about. Atomic Habits. It's about finding these little habits, these little changes you can make. And he shares all of these techniques about habit stacking. So, we all get things we like to do. So, you go and you put your gym shoes next to the thing you like to do, and you're stacking and techniques and the cumulative benefit of improving our habits. That's what I'm reading at the moment.
Stephen, I think Jacqueline, you stay online. We get one more very talented leader joining us. You stay online, Jacqueline. Her name is Parul Khanna. She is co-founder of a very, very inspirational startup. Parul, here is Stephen. Question for you. Question for Stephen.
Hey, Parul, lovely to see you.
Thank you, Sopnendu, and a pleasure to meet you here, Stephen, and Jacqueline as well. I actually wanted to stay with the question of the gig workers that you mentioned earlier. It is a space that is buzzing. They're an emerging market. They're aspirational. Yet pensions, just with the topic of pensions, they don't get regular pensions, and even for large financial institutions to reach out to them, given their income is not the same or uniform. They're intermittent in their jobs, they're highly portable. But yet how do financial institutions like yours then help these people who desperately need higher real returns? They need expert management and certainly good governance.
Yeah, fantastic question, Parul. In fact, I looked at Pinbox, I looked at your digital offering, and it looks fantastic. I mean, you're doing a wonderful thing, and you're using technology in the right way. So I'm very impressed by that. What we're doing is, I mentioned the Sustainable Development Funds that we've launched, but we're actually working on something right now, and we're working with the UK government on it. It's called LTAF. It's the Long-Term Asset Fund, and it's exactly to address the problem that you just raised. So the thing is, an institution the Stanford Endowment Fund, for example, or IBM's pension fund, they have the ability to invest patient capital. So they get access to private markets, they get access to the additional return of the fact that they can wait for their money later. But somebody, at the start of their career that doesn't earn a lot of money just cannot get access to that because it's illiquid and it's a sort of privileged access thing. LTAF is designed to solve that. So what we're doing is we're developing a fund that ensures that the fund contains the right level of private markets, alternatives, infrastructure, real estate, but has explicitly addressed the liquidity requirements of the smaller investor. And this needs to be done at a governmental and it has to be a regulated thing so that you don't get the sort of bad practices. We saw the Woodford case in the UK, for example, where there was illiquidity and people didn't realize that there was illiquidity. So the way to do this is to design from the beginning and to be crystal clear about what a fund contains and why it contains those better, longer term, risk reward premia type products. So we're working on it. We don't yet have that solved, but we are addressing, I think I'm addressing exactly the problem that you raised, Parul.
Look, Parul, reach out to Stephen after this call and get in touch with him. With that, we're coming to the end of the show, and we will see you, Stephen, again in November at the Singapore FinTech Festival. Till that time, best of luck and have a great time. Bye-bye.
Thank you. Thanks, everyone.
Wow, that's quite a lot to unpack. Well, thanks once again, Sop, Stephen as well, and two ladies who came to join us. Now, the Singapore FinTech Festival has gone through 5 years, one pandemic, hundreds and thousands of attendees, an infinite number of inspiring stories. This year, we're into our 6th year.
And to share more about what is taking place this year, Gabe, I think let's have the visuals do the talking for us.
That, ladies and gentlemen, also signifies that we are live. This year's overall theme is situated around the impact of Web 3.0, how it evolves financial services and enhances digital transformation. This is broken down into 3 days with one vertical each day. You've got business and commercial models relating to fintech, DeFi, and all that kind of stuff. You've got infrastructure practices and developments. And last but not least, you've got impact in the form of green, sustainable finance intertwined with investment. And on that note, as the world becomes more and more decentralized, SFF brings together a variety of partners that will converge on the platform from within Singapore and around the world.
And that's something I'm really looking forward to as well. On the 11th and 12th November of the SFF week, the World FinTech Festival will take us on a truly global, round-the-clock content experience with live broadcasts with a series of global satellite events hosted by key fintech and innovation hubs around the world. To date, we've confirmed partners from Budapest, Cambodia, Japan, Poland, the Philippines, and the US, as well as new partners who are behind the biggest and most successful fintech events in Brazil and Nigeria. You can expect country deep dives and exclusive content on fintech trends in these regions. Check out our website to learn more about these WFF partners and the content they plan to bring to SFF. Also on the 11th and 12th November is Oxygen by Apex. They made a debut at SFF 2020 and they'll return bigger and better this year as an upskilling platform for the financial services ecosystem, including entrepreneurs. You can now look forward to carefully curated masterclasses, panels, podcasts, and research content from industry experts dedicated to promoting knowledge sharing all year round.
And all of this is going to take place on a brand new event platform focused on providing a seamless login experience, high quality content viewing, a simpler user experience to facilitate networking opportunities and meetings. This will also be the avenue for elements such as a jobs board. We've got sponsor showcases, business matching, and all this happens before, during, and after the whole entire week of SFF. With that, registration is now open. If you're one of our first 500 registrants or signers, we've collaborated with Singapore's very own Mintable on a surprise just for you. So we've minted elements of the launch video you just saw, we've put it on the blockchain and created 500 exclusive redeemable NFTs for you, the attendee.
Now, doesn't that look amazing? I think that's a nice way for us to move on from the event and to now focus on the people and driving force behind SFF. With the fintech industry growing and expanding at such a rapid rate, how can we also innovate to keep up? The best person to speak about this is our captain and our boss. Over to you, Pat.
Thanks, Jael. So, it's coming up to 6 years since we started the Singapore FinTech Festival. And as we launch SFF 2021 today, I'm so proud to announce a new company which we will build and extend the spirit of SFF. When we started out in 2016, FinTech was still in its early stages of growth. It was very fragmented and on the fringes of financial services. But you kind of fast forward 6 years and FinTech has moved mainstream. Every week there are endless announcements of M&As, IPOs, even funding rounds and new and unique partnerships that we're beginning to see. And ultimately the pace of change and innovation is relentless. And so in tandem, that's something we must innovate and remain ahead of the curve. And you know, it's great bringing everyone together each November for SFF, but we kind of see that the industry needs much more, and you know we can do much more too. So this year we've been experimenting, as some of you may have seen, with a year-round calendar of engagements, such as kind of the Green Shoot series, Deal Fridays, and even some closed-door roundtables between the public and private sector. But that is definitely just the tip of the iceberg. The way we see it is finance is becoming embedded into our daily lives. And there are so many applications or new applications of technologies and approaches to delivering financial services. And we have a need to continually synthesize, learn, and frame opportunities. And this is going to be essential to advance the fintech industry. And as we've reflected on this last year, we took inspiration from the founder of Sequoia Capital in how knowledge is no longer a snapshot. It's continuous and it flows. And so is our vision to bring this knowledge in real time, to make it interactive and available to everyone. Ultimately, to make it affordable and to bring you diverse voices from around the world, combining some of the sharpest minds in the public and the private sectors. And so when we thought about our mission, it's about building a global knowledge and collaboration platform to foster an open dialogue between the public and private sectors to advance fintech in the digital economy. And to this end, MAS has created Elevandi to be the vehicle for this journey. And so for the curious minds out there, which I know there's quite a few, Elevandi means to lift up or raise up in Latin, which fits with what we're about and what we really intend to do. And so we've already started our work, and we've recruited a world-class team and board members with deep industry knowledge and experience in regulation, startups, banks, tech giants from around the world. And we'll be releasing more about our plans over the coming months and share how we're going to deliver real value to the community that ultimately matches the beat of our industry. So if you want to know more, simply reach out to our team. And on that note, I'm going to hand back to Gabe and Jael.
Thank you very much, Pat. And everyone, welcome back to the world-class and world's sharpest team as well. And fair to say, we are all looking very excited and we are very looking forward to it. And Jill, I think it's also pretty fair to say that we could not have done this, just not without ourselves. We definitely needed the industry to help us.
I cannot agree more. For our next session, we'll invite Sopnendu back on stage again with our esteemed sponsors of SFF and key industry leaders for a sharing session on how they're embracing the themes of the festival this year. Chief speakers, please.
Good afternoon, everybody. After this lovely introduction from Gab and Pat, let's get on to this business of Singapore FinTech Festival, what it's all about. I have with me 4 guests. Janet from UOB.
Hi.
Ari from Mastercard. Irina from Rapid.
Hello.
Also, she's a member of the Singapore FinTech Association. And we have Al-Noor joining us from London live. Hi, Al-Noor. Can you hear us?
Hi.
Good. Okay. Let me put this in perspective that why this year will be a very different year for the Singapore FinTech Festival. First, we're coming to the second year of pandemic. We hope by the time we get there, things will be easier for us. But this year, the focus is on Web 3.0. Quite technology-driven focus. One of the reasons behind this, because as this pandemic was going, we were reflecting on the future of finance. And there are 3 things which stood out for us. One is, we believe the future of finance is going to be on embedded finance. We'll get somebody to speak here on what is embedded finance is all about. Second, decentralized finance. And third, the infrastructure which will drive this, whether the outcome could be green finance or machine learning or AI, will be the Web 3.0. And that infrastructure, typically, people talk about AI, machine learning, quantum computing, distributed ledger technology. There's a whole set of tech stack which will power this. So what I thought that next 18 to 20 minutes, let's talk about each of them and understand from your perspective, because you all run businesses, how does it impact you? And that will be the big topic this year at the Singapore FinTech Festival 2021. So let's start with Janet. We talked about all these big terms, fancy word. What is your pick? Where you think the future of finance is going to land?
First, let me call out, SFF has always been a great event, great platform. It's about the people, the thought leadership, knowledge sharing. And for us at UOB, we always look forward to this. And this year in particular, like what Sopnendu say, big themes, future of finance, on embedded finance. We all want to be in our customers' life. And to be in our customers' life is to be embedded in platforms, and the convergence of platforms and the bank coming together to serve and make our customers' lives smarter, better, easier, more convenient. That's a big area for UOB. The second, and of course this is the part that everybody talks about, decentralized finance. Okay? The whole idea of central bank digital currencies, where it's going, the entire thought leadership, what it means for regulators, companies, banks, users, businesses. I think that is a deep, broad topic that everybody is interested in. And I would be amiss if I don't add the point around the topic of sustainability, right? Elephant in the room, everybody is talking about green, about carbon neutral. This is also an area where we as a bank, particularly in ASEAN, has that unique position to try to rally, right, the ecosystem to behave and to invest and to lend and to bring consumers to live, play, and work in a sustainable way. So these themes, exciting and truly look forward.
Well, Janet, before I go to Ari, one of the biggest challenge for banks would be this very concept that first we told that banking is not going to be in the branches and call center. It will be in the online. Now you're telling you'll not be in the online platform. It's going to get out of you, go to somebody else. Do you think the regulation will look quite different? Is there something you want to know at the Singapore FinTech Festival, the impact on regulation?
I think it's not only about the impact on regulation. The main thing around how do we share data? how do we engender trust? How can I trust another party to be able to work with me, share the data about common customer,
Sure.
and serve them well? Who's going to help us to set standards? Is it negotiation one by one? Or we really do have a framework where multiple parties, multiple countries, and we can't do it alone, can come together with a agreed set of terms that everybody can buy in and start innovating from there.
Sure.
I think that's really what
I'll come back to the data trust because I have somebody after you.
Okay.
We're going to spend time on trust. So, Ari, Web 3.0, Mastercard, tech company, as last time we spoke, you should be quite excited.
Absolutely, Sopnendu, great to be here. And I want to build on what Janet has just shared. If you really look at the evolution of the internet and the application race that has come in the last, I'd say, 15, 20 years, you've gone from Web 1.0, the advent of the internet, to Web 2.0, when you've got the Facebooks and the Googles and the Microsofts all have scaled. At Web 3.0, what is really exciting is that you're creating the power of open source technology on how are you going to build applications and really bringing innovation at scale, which small businesses will be able to challenge the so-called giants in the economy. I think this is a really exciting phase. And frankly, I say this with utmost humility that, we are a big company and we also believe that, this is not an entitled state for us to be in. And therefore be able to see this innovation and be able to participate. And how do you participate? Janet talked about decentralized finance and central bank digital currencies, something we are taking deep interest in. We are in the business of moving money, which is fiat currency, from point A to point B. A significant change is going to happen with CBDCs. What does it mean for us? The implications for us. We've got a virtual CBDC test environment that we've opened up for many players to participate. You know, Sopnendu, well, that the MAS CBDC Challenge, we are partnered with MAS on that journey. Our view really is that we don't have all the answers, but we do believe that there is deep embedded capabilities that have been built over the last 50 years, whether it is data governance, whether it is trust, whether it is how sharing happens, all of that, technology standards that have been globalized over a period of time that delivers higher order safety and security. We think there is a space and play for all of our assets and capabilities with many new players who are going to be out there. Our crypto startup program that enables all crypto asset players to come participate with us is being done with the utmost humility, is that we are learning as we go. And hopefully, as we do this, we'll be able to create value for the broader society in general.
Sure, Ari, thanks for bringing that whole CBDC challenge you're participating. And whether you are aware or not, I don't know, we just closed our participation. We had a record. I mean, this is just way beyond expectation. 50 countries are submitting proposal, more than 300 proposals to solve a retail CBDC. Talks about how much it has become part of the mainstream narrative now. People are really looking forward to it. And Mastercard indeed has a sandbox which will be part of this whole exercise. I would strongly encourage people to join the Epic Sandbox and look at the Mastercard APIs, which will help you to design this future retail CBDC. But I'll come back to Ari on your on the whole green agenda. But yes, hold on to it. I'll go to Irina on the whole infrastructure piece, because Rapid is an infrastructure company.
We are.
The Web 3.0 will impact the way we design our systems, the way we think about the core infrastructure. How much of that is affecting your own thinking about the market infrastructure, which will change due to Web 3.0? I mean, you can broaden it, you can narrow it.
Sure, of course. So just like Ari said, we also don't have all the answers. We have a big vision. I think, actually, everyone here in this panel has some of their own versions and variations of the future state and what should we be doing. So I think the importance of having this conversation is actually having the representation of the different views. And that probably will be one of the most important things that I will be, as on behalf of my company, I can say that we will be looking forward at the Singapore FinTech Festival this year, making sure that it's not just the quality of the insights and the quality as has always been, is extremely high. It's exceptional quality of the speakers and experts from across the industry, but also making sure that all of the different stakeholders, and this is where SFF is a very unique place, all the stakeholders are represented. Policymakers, heads of central banks, heads of banks, heads of payment schemes, infrastructure companies or payment companies like ours, fintech founders, or VCs, investors even, at some stage. Obviously, they also have to contribute to the discussion. So while all of those pieces come together, I think we can solve the biggest pain point, which in the payment space is fragmentation. I feel like that's probably the hardest challenge. There continues to be a lot of friction, and while there are amazing initiatives, such as Pay Now connecting to PromptPay and some of the discussions and initiatives driven by MAS, there still is a lot that has to be solved. So quality of insights, representation of the stakeholders, and I think the third thing that is extremely important is it's not just about talking about the vision, it's also about having people that can commit to the vision and take actions and, well, commit to actions right there on the spot during this conversation. So I think I've heard this quote, which I really like, is about people are often in the space, read from the same book, but rarely, seldom on the same page. So bringing everyone to the same page is important, and that's something that I'm really looking forward to.
Good. I think I think we all have in some kind of image in our brain on how it looks like, but we're all trying to discover. Hopefully by November, we'll have experts who can talk to this whole 3.0, we get things clearer. But before we go, let's go to London and let's talk to our friend Al-Noor, who is dialing from London. And insurance company, Web 3.0 looks a good match.
Well, we've had thank you, Sopnendu. We've had a very bad year for all of us, maybe 2 years. It's impacted everybody's concerns about health, but also impacted their wealth. You know, people are unemployed, et cetera, et cetera. So that sets the backdrop. Now, when you bring Web 3.0 in, and particularly a great event like the SFF, the Singapore FinTech Festival, I think what it gives us an opportunity to do is to think about solving two significant customer pain points, right? And I'll give you an example in a minute, but the first one, I'm just going to label it as a customer as CEO, right? So today, when you got concerns about your health, etc., all you can do is go get a test. There's a whole chain of health, if you like, ecosystem, whether you start with a doctor, clinician, pharmacy, hospitals, etc. Along that pathway, right, they're not connected. So whether you talk about embedded systems, infrastructure, you know, decentralized systems, as far as the customers is concerned, and again, I'll repeat the phrase, customer is the CEO, how can they orchestrate this so it benefits them? So I think the FinTech Festival here will bring together a lot of these participants. Now, if you look at the wealth side, and at Prudential, we bring health and wealth together in Pulse. And being the founder, really what I try to do here is to adopt the customer perspective. So how can we bring these together? It allows us to get a new business model. So at present, we're kind of reactive. But if we can think about a predictive or a prevention kind of model, let me give an example. Can we use Web 3.0 so it's not just blockchain, the IoT devices with blockchain, and also get the 5G, which is needed for IoT devices, etc., data and AI, so that we focus on the customer. So when the customer has a need, for example, is about to run out of money, or more important, about to run out of health, God forbid there's a stroke due, we can deliver the doctor to the person or the person to the doctor before they even know it's needed. And I think this gives us a huge opportunity when everybody gets together in Singapore, God willing, that we can discuss these matters. And for the first time in Web 3.0, we can actually do it without needing total consensus, meaning with decentralization and with blockchain, we can actually do these things so that the consumer, the customer, can view them as united, even if we ourselves have different business models and different ways of making money from the same chain. So as an insurance company, moving not just from protection to prevention, but also helping seamlessness across the whole chain allows us to really serve the consumer better, much, much better than we're doing today, but also allows them to accumulate wealth. Because in Asia, as you know, in most parts of the world, a health incident results in a wealth disaster. And by making sure that we have AI as your doctor before you even get to the physical doctor, but delivering the physical doctor via video during these times of crisis, and then a real one, etc. And similarly for the wealth advisory, I think we can democratize both health and wealth, but also make it a very, very high quality. So I think I'm really looking forward to people attending. I'll leave it there, Sopnendu, for any further comment.
Thanks for giving a wonderful insight from where you look at the whole space. From my perspective, this year we are going to do 3 days of deep dive into Web 3.0. And what we intend to do, that day one will focus on all the business cases, what goes on top of this new tech stack. We'll go every asset class by asset class. Second day, we're going to go after understanding what it takes to build this technology. Day 3, I think Al-Noor also spoke about this. Okay, you can put this lovely infrastructure, even Irina, you're speaking about it. What are the role of policymakers, infrastructure, 5G, data policies, as Janet was saying that the banking is going to get out of the banking domain and go into other domain. Are they all going to level set in terms of same regulatory obligations? The whole set of policy challenges, which we're going to debate on the day 3. But there's 2 things we're going to look at across all the 3, which is going to be core to all this discussion, which I'm going to spend next round on that, is the green part. Because now green is not a choice, it is part of the design. So we're going to ensure that whatever we build on Web 3.0, green becomes part of the design to start with. So all of you, I'll go with Janet again, reflect on the green agenda, how much you feel strongly about it and what you want to see at the SFF on green.
You know, the topic is so large, right? I think at the end of the day, it is really ultimately how do we deliver impact? Right? Impact to the consumers. How do we ensure that consumers can make responsible choices? They have the information to live, to play, to spend, and to invest in a directed fashion with the information. And I think that's something that we will really spend time on, right? I think the part around mobilizing resources correctly, yeah? And this is actually why I'm really looking forward to this day 3, right? Because there's so many stakeholders involved. Irina mentioned, right? There's so many stakeholders, from the companies that today produce a lot of carbon emission, to the ones that have the solutions,
yes,
right? To the ones that today wants to mobilize capital in a responsible manner, but yet not knowing how and where to direct these, right? I think the impact will be linked to how well we get information and how authentic this information is and how easily accessible this is made to the wide ecosystem.
Sure.
Right? And then having the common language. So if I have to say, from a UOB's perspective, we ourselves own a lot of buildings. We can first commit. But beyond that, right, we want to make sure that we deploy, green finance, and we did a couple of leading green trade finance deals,
Sure.
thanks to MAS, the GFIT, initiative. So that's the start. But there is still so much more that we need to do.
Agree.
And that's really
Yes.
how we hope that people can come together and form framework, take action, and then start from here.
Ari, before you respond, there's one data point that we just got to know recently. 80% of the green computing data is sitting with payment company. I don't know how true it is, So you have a big role to play in the whole green. So on the SFF.
So, it's a commitment we take very seriously. And to give you a sense of how seriously we take this commitment, part of our executive compensation is now tied to our ESG goals. So SOPs, this is clearly hits the pocket. We are absolutely committed. And let me give you a sense of, there are big things we do and then there are little things. And not that the big one is greater than the smaller things you do. So I'll give you a sense is, our Priceless Coalition partnership has over 60 partners. We have committed to plant 100 million trees over the course of the next few years. And I'm including within the 100 million is trees saved is also a tree planted, right? So you don't necessarily have to plant 100 million, but what are you doing to save trees? We are moving a target of 100% renewable energy to power all our data centers and our offices and what have you, right? We are looking at green certified buildings, across the board. We're at the Duo Tower here in Singapore, which is again a green certified building. So those are the choices that we are making. I would also add is that, we are also this is very much part of the action plan, is sustainability and social development. Our commitments towards small businesses. I think Al-Noor talked about the digital divide and the societal divide that the COVID period has caused. We've committed over $250 million to small businesses in the coming years. We have taken our target on financial inclusion, which was 500 million in the first 5 years of that target. And just last year, we've doubled down for another 500 million consumers to be brought on into the digital economy. And coupled with that, 50 million, what we call small businesses, will be digitized and brought into the digital economy. Again, this is our effort to make sure that we are driving for
so we're going to see some of this
society.
So we're going to see some of this being shared at the SFF.
Absolutely, most definitely.
Good. This time the question is not for Rapid, where you work for, but more the association perspective. I think you're going to bring the globally other association together, hopefully at the SFF. Are you going to see expecting from your side as an association perspective, a lot of discussion around green agenda? Is that something?
So personally, how I like to look at this question is actually not from the green angle, but from the responsible angle. I think responsible business in general and sustainable business includes many different things. And green carbon emissions is one aspect of it. I feel that there probably is a little bit more beyond that. So what Ari's just talked about providing services to the underrepresented or underserviced types of segments, but also doing it in a way that is sustainable for the business, not just burning, the money, the VC money. It's not for the point of, CSR. It's something that should be driving value and creating value for actually all the different stakeholders. So I think that is probably the topic that I feel very connected to. How do we make sure that we evolve and innovate in a sustainable and long-term way with responsible living, responsible business building in mind?
Good. Well, we have a couple of minutes left. I'll go to Al-Noor. Al-Noor, you know what? You talk about, let's not talk green for a moment. Let's talk about with you responsible, sustainable part of the whole discussion around pension plans, sustainable insurance plan. Do you expect that this year SFF, we should actually be a little more bolder and go into those big unfinished or unmet agenda around pension plans, microinsurance is something you will feel excited about?
I think very much. Look, I think people have suffered greatly, and I think we've discovered how much of society depends on little or no savings, right? And both ends, pensions, which you refer to, but also people have no savings to start with. How will they get pensions other than obviously Singapore has a fantastic scheme and so on? I think we should explore it. Sure. And frankly, even though on the green side, even though you didn't ask me that question, consumers will select companies now based on what they perceive as the greater good agenda. So I would call it doing well by doing good. It's actually part of the design we all have to have in our companies now. But I think so pensions will be increasingly a problem with the aging society. You're dead right to hit it. Even China is beginning to explore this now. And at the other end of the scale, we better start youngsters with savings because they've got no hope to get on the housing ladder. So all of those things are interrelated. If the financial system has the degree of friction it does now, will doom both our kids as well as our grandparents or parents, depending on who you are, obviously. And I think both ends is really bad for society.
Thank you. Well, we are up on the time. We'll come back again and talk at the SFF 2021. Personally, I would say my favorite would be a little bit of a cryptocurrency fun there. And I hope by the time we'll find exciting solution on the whole retail bank digital currency, the AI challenge going out. So we're all looking for a great gathering, and hopefully you will be surprised with kind of thing we're going to bring at this year SFF. And watch out, and we'll be constantly posting you updates around SFF and some new ideas being floated. Watch out the space, and we all look forward to join us at the SFF 2021 in the month of November. See you soon.
And thank you so much, Sop. You definitely articulate the themes in a more visionary way. For our partners, our sponsors, thank you very much for your sharing, and we are very grateful for the support. And it's not just sponsors and partners you just saw. There's so many other names who supported us. We've got Prudential, we've got AMTD, Temasek, Circle, Microsoft.
That's right, and also Austrade, Credit Agricole, NEC, R3, Tezos, and Mastercard. I am really looking forward to the industry deep dives in November this year. Shall we move on to the next session, Gabe?
Indeed, we must, and we will. Speaking of the industry, our last segment for today will spotlight two VCs, two fintech unicorns who have made big announcements very, very recently. And on to our final event, which is going to be a fight of sorts. Of course, not a real one, but kind of. For the first time at Green Shoots and Singapore FinTech Festival, we present to you the FinTech Fight Club.
Thanks, Gabe. And so now on to our last session of this launch event. We are joined by four of the most opinionated people in FinTech, and some may say annoyingly so. And we wanted to mix this up and add kind of like a competitive format to this. So we've asked each of our experts to think about the hottest trend in FinTech and pitch it simply for 2 minutes, while the rest of the panel will have to play devil's advocate and argue against their chosen topic.
So if you're starting a business or want to know where to place your money, stay tuned for the next 30 minutes to hear what trends our experts are betting on. So panelists, I hope you've taken some inspiration from the Olympics this week, because this is a battle, it is a competition, and there is a prize to be won. Are you ready?
Yes, absolutely.
Well, I hope so. So first up, we have Amrish, weighing in at 200 pounds, a real heavyweight in the Asian fintech scene, and also known as the godfather of fintech in India. Outside of founding Citrus Pay and currently leading the unicorn Pine Labs, he is a seasoned whiskey drinker and can drink most people under the table. I'm looking at you, Praj. So Amrish, what topic have you chosen?
About the whiskies or fintech?
Both is fine.
Well, the topic I've chosen is real-time payments. I think real-time payments is the real deal. For those of you who have been hiding under a rock, real-time payments is about moving money, using aliases or even mobile numbers to send money. What could happen in the next couple of years is money could move actually faster than WhatsApp messages, and that's going to have a big impact on the economy which has adopted to real-time payments. We are seeing real-time payments being implemented by many countries in Southeast Asia, Latin America. US has announced plans to go there by 2023, 2024. This provides lots of benefits to the consumer. A, it's extremely simple. B, allows you to keep money in your bank account. C, allows you to move money without having to remember long 16-digit numbers or some SWIFT code. You can literally send money just on somebody's mobile number. This allows money to move in milliseconds. We've already seen the impact of that across the world. For example, in Singapore, the wet markets of Singapore had generally been averse to accepting digital payments. But once real-time payments got introduced in Singapore, most of them have actually moved to pay now. Similarly, in India, we've seen a small entrepreneur who runs classes for housewives. She actually has 10,000 viewers every afternoon at about 4 o'clock. And all that she does is she collects 10 rupees from each of the viewers. So what real-time payments has done is it's also reduced the cost of transaction, allowed new business to come to fore, and this is a real example of how fintech has an impact on the real economy and can change people's behavior and can help businesses monetize. So I think real-time payments is a real deal. It will have the most impact on the real economy.
Wow, that's a very, very strong pitch. And I'm going to come to Melissa in a second because I'm sure she's got, as a payments expert, she's got a few kind of areas that she might want to poke holes at. But what happens if I like slow payments? You know, I want payments to come out of my account, you know, slowly. I don't want it out of my account within seconds. What's your answer to that?
You're like my dad. He likes checks too.
Yes, I am your father. Okay, so Melissa, over to you.
No, I was just going to give you a little ribbing to say the only reason you'd want that is because you don't have anything in your bank balance. You set yourself up for that one, Pat.
So, Amrish, let me throw a question at you. Real-time payments, yes, a big deal, but the success rates are so low, right? Like if you look at UPI, which is the biggest proponent of real-time payments across the globe, the success rate is a big challenge, right? Like if you see every startup and its cow is moaning about the fact that, hey, you know, this bank doesn't work, how do I improve success rates, etc., etc. So the good thing about a card or the existing rails which we have is the benefit of being able to do it instant if you don't have another platform. But if the UPI rail is down or you get a rejection, how do you deal with it? Like that's...
No, you make a great point. What the card system has been working on for the 40 years to master real-time payments, which has been around for 40 months, I think they'll solve it by the 48th month. So, hey, look, don't look back, look forward. I think in the next 5 to 6 months' time, most of these transaction delays would be sorted. We're getting to see actually success rates of almost about 70-75% when it comes to real-time payment transactions in India. Actually, the Pay Now implementation in Singapore is also extremely good.
And as you're the cards guru, what's it on the card side? The authorization rates, so you said 75% RTP, cards rate is what?
You know, you'll be surprised, but in my businesses, what I have seen is cards rate success is still 70 and below, and I'll tell you why. Because people don't remember the OTP, people don't remember the password, they don't remember the 16 digits. All sets of problems actually set in, right? So when you look at in totality, I really do think real-time payments has a better success rate than a card-based transaction. Now, you're absolutely right. If the consumer gets everything right, then card-based payments are as good as RTP transaction like UPI or a QR code on UPI.
Edith, do you want to weigh in on this? Any views and opinions on why real-time payments aren't the real deal?
I'm actually a big fan of real-time payment. I think that in many sense, sitting in San Francisco, the US infrastructure is actually quite behind. In fact, many of the banks are still built on mainframe. Many years ago, I actually worked on a collection system on mainframe in Wells Fargo, and they just can't believe how behind it is. So in many sense, I think on the real-time payment area, there's so much we should learn from India, from China. Asia is like way ahead compared to a developed country like the US.
So it looks like you're supporting Amrish right now. I'm sure, Melissa, you've got a few extra things you might want to say, and then we'll come back to you, Praj.
Sure. Well, first of all, Amrish, congratulations, because real-time payments is really important, except it's not tomorrow's story. It already is. And so it's not about the future. It's kind of about the past. I mean, Pay Now is a great system. And, you know, as we think about things globally over the next couple of years, I mean, real-time payments is already a story. So I don't think it's the next story. So sorry about that. It's kind of disqualified for this purpose. But I do think that it's hard to argue with real-time payments if you have substantial amounts in your account. I think what we need to complement RTP with is different types of settlement for those that still need to finance things over time, which is sort of the role of buy now, pay later, which is essentially just a virtual credit card. So can't argue with RTP, just argue that it's not forward-looking, it's sort of historical in here and now.
It's a fair argument, and I suppose it's the services you build on top of RTP is what's next. But Prajit, what would you like to say?
I think, again, echoing everyone, RTP is great, but again, going back to one point which Amrish made, which I'm not a big fan about, is the fact that it actually helps you solve only the P2P use case. Like Amrish and I came in together, we had a cup of coffee, he wants to pay me back. I don't need the money, but if you want to, I'm happy. But
you're not paying him back, are you?
So great use case. But if it's commerce, right? Like for example, one of the most amazing things card rails have done is build trust in it, right? I use a service from Amrish, I don't like the service, I initiate a chargeback. Real-time payments, there is zero protection, right? So Amrish, what do you think about RTP for commerce?
So Prajit, I'm not going to recommend any investor to you, and our is not going to get any of my startups going. Edith, we are going to be friends.
But wait a second, Prajit, why do you think it doesn't work for commerce? I have to take commerce's side.
I think
it works perfectly fine for commerce.
No, I think the chargeback protection isn't there. So let's say that you buy something on Amazon, right? And you pay via an RTP. Today, you get a product which is supposed to be a laptop and you get a desktop. You have to actually go back to Amazon, raise a request, get a refund, etc. And if they don't behave, you can't do anything. But if it was on a card, you call up your card company, say, I'm not happy with this product, and you're the card guru, right? There is a difference, there is a buyback protection. And I don't think RTP solves for that. And the other thing which RTP doesn't solve, though we are a big proponent of it, is the amount of risk you take. Unfortunately, the way the governments have devised the laws today, and I think they need to change, is that Amrish sent money to a corporate for an activity. For 3 months, I sit on the liability that Amrish can come back to me and say that I sent the money by mistake. Even though he's used my services, he's gone on a flight and things like that. So there are a lot of issues around RTP which require still solving.
You know, interestingly, I think what you're saying is that what the cards set up as the standards 30, 40 years back is something which will hold true for the future. When you look at what an Amazon is doing and what most of the global e-commerce companies are doing, they're actually enabling faster refunds, faster promotion money going back to the consumer. So really all that you talked about processes should really happen outside the payments layer. Payments layer should only be about money moving from one individual to another. How the refunds happen should really be at a commerce level. And you're absolutely right. What the card networks did was they actually combined what happens at a commerce layer and payment layer and tried to combine it together. I think RTP is just a clean way of moving money from one individual to another and do it exactly how WhatsApp messages goes. So I do believe that processes and business operations will change on the backs of RTP, but it'll bring in almost 3x the consumer base into the digital economy, which is good for everyone. We're getting to see that in India, getting to see that even in Singapore market, where in the last 2 years, 3 years, I think Pay Now has gone into sectors which were not ready to accept digital payments.
Okay, so now we're going to move on to our next victim. So next up, we have Melissa Guzzi, a seasoned pro on the Flight Club circuit. Last year, she went toe-to-toe with Jonathan Weiner and Sheil and narrowly lost on a minor technicality. So she's currently running Arbor Ventures and is hiding out in San Francisco. And so, Melissa, what trend have you chosen?
Well, this is again our opinion, but we think that central bank digital currencies is going to change the entire payment settlement world, where there's going to eliminate the need for USD clearing and also eliminate the need for SWIFT. And it will get rolled out first in Asia, probably from China, who's running some interesting POCs, then spread not only within China, which works very much like Alipay or WeChat Pay, but then also through the Silk Road, Asia, Africa, and then eventually will be settlements to Europe and eventually to the US. Not every economy in the world will have a CBDC, not every central bank, but then you'll see stable coins linked to fiat currency, and it will change the entire payment infrastructure globally, making it less expensive. but also more transparency, more traceability, less opaque. And it's one of the trends that we're absolutely investing behind and think it's one of the most important transitions we'll see in payments in the next decade.
Short and sweet, but I think you've covered a lot of ground there, certainly globally. I'm going to move on to Prajit. So what would you like to say to Melissa?
I think, Melissa, is there a government project which has ever been done right? Like, is there like...
It's not about a government project. It's about a much higher mandate, as one could say, that the world has been dependent upon USD clearing and SWIFT, and that SWIFT is outdated. And there's a strong geopolitical movement to perhaps not want to have the USD as the clearing currency. And it makes sense, given the digital world we now live in, to be able to go direct settlement. You have the Bank of International Settlements, who's working on it as well. And there's no doubt that there's a role for the private economy and for startups, because as you just mentioned, the user interface to point of sale systems, to e-commerce payments and others will be developed by startups in the private sector. And also companies like Visa, who are doing a lot in and around the settlement side to fiat for the use of cards. So we can say we have had successful government projects. Look at Pay Now, Singapore, very, very successful. It's a question of being able to coordinate at different levels of different governments. It won't be the same in every government, but it will happen.
Yeah, I think, like, I don't disagree with some points, but the fact that governments are running it, Pay Now is an infrastructure project replicated, like Vocalink, for example, was the original proponent in UK, faster payments. So that's much easier. As soon as you come to CBDC, digital currencies, countries like India frowning upon still. Singapore is doing some path-breaking work around it. But the fact is, for the governments to take a really strong stand, it's working with other governments, it's making it fungible. And I just think that it's a far-looking project. And I know a lot of people are breaking stones, but it's just breaking stones. By the time they have a building ready, it's going to be years and years.
So we're going to sidestep away from governments.
But I will say this, all you're doing is linking a digital to the fiat, and that's all you're doing. It's not, all you're doing is removing the physical with the digital. And that's just along the same lines of the same trend of RTP, which is we need to have faster settlement payments across the world. It needs to be less expensive. And oh, by the way, some governments don't want to use USD clearing as the reserve currency. And we're in a shifting world where things are going to change. And yes, it may be not 5 years away, maybe it's a decade away, but it is one of the most important transitions we'll ever see in our lifetimes when it comes to monetary policy.
You might have just shot yourself in the foot there, Melissa. Having criticised Amrish for being in the past, it just doesn't necessarily sound like the trend for this year if you're saying it will come into effect in the next 5 to 10 years, perhaps. Edith, what's your view on whether CBDCs will be the biggest impact for this year? Please argue against Melissa.
Okay. Melissa, what's your thoughts? Aren't you afraid that, like, the concept is great, but in terms of implementation, right now, at least what's running the POC in China is that they dictate all the node. So in some sense, even though it's supposed to be a distributed database, it's really a centralized way of implementing it. So what's your thought into basically making sure that the framework itself is being implemented correctly? That's really the part that I think a lot of folks are afraid of.
Well, to Rebecca's point, I don't disagree it's not this year's trend, but we're a venture capital firm. We invest in not this year's trends. We're investing in things that we think are going to become extremely relevant over the next 5 or 10 years. And if you invest in this year's trends, it's kind of too late.
Very meta. You're picking apart our debate live on stage. To go back to Edith's point, and hopefully we're getting your sound back, the point was about the fear around the way that CBDCs are implemented. So they're implemented in quite a controlled way, and she gave the example in China where the nodes are being controlled as it's implemented. So I guess the question there is around implementation and some of the risks or perhaps the difficulties of doing that.
Well, I think she's exactly right on that, which is, but it's a battle between reg tech and governments having that transparency of where money's moving. I mean, a lot of what you see in reg tech is dealing with, you know, eliminating the opaqueness and compliance around AML and money movements globally, right? We're all in a world of far more compliance and regulatory and regulatory oversight than we've ever been in, or at least for a very long time. And that's exactly right? Is that this solves some of those problems for some of the governments. Now, whether as an individual you like it or not, that's a different debate. But from a monetary perspective, this is a trend that will either happen regardless whether it's physical currency or digital currency. We're going to have more and more oversight. I mean, COVID-19 has been an absolute license for governments to start to implement regulation where they've been tiptoeing around it for the last couple of years.
Amrish, you've been very quiet so far.
There are many countries around the world who continue to use currency to control inflation in their country, and hence where the currency moves and how currency can be controlled is something which is very, very important for many countries. Hence, it is very, very important for those countries actually not to allow digital currencies to get converted from one currency to another, and they want to have control over all of that. You know, a great example for it is why the Indian rupee and why the Indian government doesn't really want to move towards bitcoins is because they don't want rupees to fly out of the country very easily. I think the same argument holds good for CBDC, right? Till the time the countries don't feel confident that they can control their currency, I don't think so they're going to embrace CBDCs very quickly. So I do think it will happen, but it is about 10 years away from today. By the way, I just have a point of view, and that is, idea can be great, but it can take you 10 years. So you would have still lost your money if you have invested too early in it.
Melissa, closing remarks for me.
No, well, I think exactly one of the benefits of CBDCs is that you can implement the capital controls as you see fit at any given point in time and vary them. So I don't see that as an argument at all. I see it as a positive for CBDCs. I think, sure, you can invest too early, but usually that's only if you're burning tremendous amounts of cash. I mean, people forget how old Stripe is actually as a company. They only see it now. Or I think Prajit, you started new many years ago, right? It takes a long time to build a company and build a startup. I think what we have seen is that the infrastructure being built for crypto is going to be is a predecessor to what will happen and what will be needed for central bank digital currencies as well as stable coins globally. But without a doubt, you cannot argue that the geopolitical environment is such, with a desire to remove the US dollar as the reserve currency and eliminate SWIFT, or at least mitigate the dependence upon SWIFT and be able to do direct settlements. Now, whether it's wholesale or retail is yet to be seen. And maybe the concept is further away than people think, or maybe, or than maybe most. But at the end of the day, digitizing fiat currency is inevitable.
Boom.
Mic drop moment. All right, we're going to move on to our next victim, who's a newcomer to this competition, untested and an unknown threat to all of you. Having started out at 500, Edith is now the general partner at Race Capital and has personally made over 50 investments, including 2 companies that have been acquired by Apple, 1 by Pinterest, and an investment that I think will be relevant to the discussion today in Stellar that's now valued at 1.5 billion. So what trend have you chosen, Edith?
Today I've chosen decentralized finance, DeFi. So here's my argument. I think DeFi is redefining the future of finance. It is the biggest force that's changing the landscape of fintech. And I think that there's so many exciting financial applications will be changed and completely change how the way that they run. And it's also changing the way that we think about permission control, transparency, and risk. And it is a perfect intersection with blockchain, digital asset, and financial infrastructure. And of course, and this includes many, many things, right? From decentralized trading exchanges, lending, stable coins, synthetic asset, insurance, many, many other things. So the value of digital asset, according to DeFi Pulse, in 2019, it was about 1 billion. And get to 2020, it increased 1,000% to 10 billion. And then 2021, up till now, is about 80 billion. And there's a very, very particular reason for that. First off, the concept of DeFi, I think, is very, very difficult for traditional finance people to wrap their head around, which is really exciting, I think, as a early stage investors. One is everything is built on a blockchain. So like the concept of it is, in the US term, you don't need Fiserv or Jack Henry, none of this. It wouldn't even need to exist. Second, it's all about open source. It's all about transparency. No more black box. So if you think about it, right, we don't actually even need like flag or anything like this in the future. Second, it's all programmable, interoperable, because now there's a lot of application is built on the same blockchain. And then last but not least is permissionless. So the whole concept of having a centralized or government, that concept doesn't even exist. I have invested in 2 companies, which is my 2, not only unicorn, it's actually Decticon. One is FTX. They are one of the biggest derivative exchanges. They're doing about 10 billion in daily trading volume. It's all around supporting many under DeFi token. And then Solana, which now track hundreds and hundreds of projects, is built on top of Solana. There's the biggest rival for Ethereum. And you're talking about hundreds of DeFi developers built on top of it. So to conclude, I'm super bullish on DeFi. I actually believe that it will change how the way that finance will work. And I look forward to investing in the future.
You can't argue with those numbers, can you, Amrit?
No, look, I think that argument is good. And just to be nice back, I do see that around the world, and I actually had invested into a company which was in the DeFi space. To my last argument, what's going to happen is interest rates are now going to be borderless on the backs of DeFi. What that means is somebody could be sitting in Japan, lending to somebody in India, and they could be lending at a interest rate which is somewhere in between. So I do think that DeFi has a very important play. However, in the same investment of mine, one part which I struggled with is I first tried to understand blockchain, then tried to understand coins, then tried to understand DeFi, and then try and understand the applications. I think it's going to take a little while before it all comes into mainstream once again. So yes, out there for a few years now.
Does that mean you're counting yourself as a traditional finance player? I think Edith said it would be hard for traditional finance to wrap their heads around. Melissa,
I still love Cambridge.
Melissa, what's your take? You're shaking your head.
Well, I mean, I do think it's an important area. I do think it's got a lot of interesting applications. I think governments are going to wrap their head around how they're going to treat it and tax it. There's been a lot of money made. Is it really sustainable and supportive? Can be supported over a long period of time? Maybe, maybe not. I mean, are we going to see competitors to Ethereum and others? Absolutely. So yeah, I mean, I think it's an interesting area, and I do think it probably has a lot of legs depending upon what happens in the world. So yeah.
There's been no arguments against so far. What's going on here, Brad?
It was a lackluster, interesting. I just think, just adding on to what Amrish was saying, I think the complexity of unraveling what it means, right? Like today when you go to a bank to take a loan, it's very straightforward. You walk into a bank and you say, and you know that they have deposits and that's how they lend. Now trying to explain to somebody how this money is coming from, like even if you, like I've heard crazy stories where give the money with us and you'll get 5%. Like that's like being back home in India and on US dollars, right? This is incredible. But every time somebody says that, you like, this doesn't smell right, right? Like, you know, am I going to get cleaned out of all my savings? And I think that's what's happened, right? Like, and there are a lot of positives, and of course, you know, so this is again future looking for me. I think right now, cusp of crypto blockchain is with a very small percentage wealthy people, right? And that change, like everyone sells the vision that, oh, I want the poorest person in Nigeria to be able to buy bread with it and make or save money with it, but that's not true. Today it's held with people who are obnoxiously rich and can control it, and when it fails, like a coin failed few months back, people say that, oh, it should be regulated now, right? Like, so I just think
I think to Brigitte point is will be regulated. I mean, there is no doubt that regulation is coming around that area much more strongly. You're right, Brigitte, around that.
Edith, is it just something for the obnoxiously rich?
No, I actually, in fact, one thing I do want to point out, so far, basically the way to think about it, most of the DeFi applications being built is basically building many Plague-like API protocol. So it's definitely not for prime time. And in fact, I think a lot of developers say they wanted to, save Africa. They have never been to Africa, so they don't understand the pain point. And so I don't trust any of them because they have no idea what they're talking about. But I think like right now, what's being built, and it's still really early, is it's not really application of the UI layer. It's not there yet. It's really just want to make sure that. And by the way, there's still a lot of work need to be done on the KYC AML side. How is that going to be compliance and work with various different government and make sure that consumer at the end of the day will be protected. There's still a lot of work, but what I'm excited about really is the DeFi space to redefining infrastructure. No more mainframe, not even the client server, and it's really about decentralization and making things that is efficient, interoperable, and open source. That's the exciting piece, and I look forward to co-investing with all of you.
I think for me, I put money in a bank today, not on a fixed deposit, but if you put in a fixed deposit, you make 0.005%. And if you put in a DeFi project, you get 5%. There is a reason why, because DeFi is risky. Tomorrow that can be zero. With the bank, it's not going to be zero. You may get your principal back at that element. So a big fan, but right now not for me.
Prajit, so the way this works is if you are in a high inflation economy and where you are getting interest rates, which is let's say at 7 or 8%, while you could be in Japan, wherein the interest rates could be 0 or negative.
Correct.
You end up getting almost the in between of that. That's right. The reason why you get your 4 or 5% on the DeFi framework. And that's what I'm saying.
So you have to be against
it just makes it borderless, on the DeFi platform. Well, I'm an investor, right?
It looks like Amrish and Edith are colluding.
I'm an investor in the DeFi project, so I do like the idea.
Edith, I'm going to come to you for your closing remarks. How do you persuade a traditional banker, it seems to be Praj in the room, that's not getting it?
So I like my money to be safe. Like I'm happy to put in aggressive funds, but I want it to be safe. Like I don't want to get up in the morning and it's become zero.
Closing remarks from you, Edith.
My closing remarks is I think there's definitely still a lot of room to further develop, to further making sure that all our consumers being protected. But the key thing is, as our fellow panelists today, is one of the main reason why now is 80 billion being locked in the DeFi product is because at the end of the day, consumer like to make money. And it's something that when there's money involved, all the developers is super motivated when there's an open source, interoperable blockchain ecosystem where you can really build on. And particularly with Solana, 50,000 TPS is not as low as Ethereum. There's just so much room for us to further develop. Hundreds and thousands of developers, they can't make stuff up. So it's definitely an area all of us need to watch out for. And it's not something we cannot ignore.
Nice. All right, on to our final contestant that needs no introduction. In fact, I'm surprised his head fit through the door today following his company's most recent funding announcement. Congratulations.
Thank you.
Neum is now the first Southeast Asian B2B payments unicorn. Round of applause. So yeah, huge congratulations to you. But of course, representing MAS today, that will not influence our decision in any way. This competition is based on merit alone. So Mr. Unicorn, please take us away.
Perfect. Thanks, Pat. Thanks, Becca, for having me. Thanks, esteemed panelists. And my topic is going to be embedded finance. And as you guys have rightly said, this is the future, right? And the reason why I call it the future is, let's give a hypothetical and possibly a real situation. 2 years from now, you open Financial Times online. Pine Labs has gone public and reported their stellar, most amazing quarter they've ever had in their history. And everything is amazing, and you see a buy button on besides that comment. You click buy, you put 100,000 shares to be bought, click submit, voila. At the back end, your Charles Schwab or your Robinhood or some of the other account has actually been triggered. But in reality, you bought a stock based on a FT article. So basically, that's what embedded finance is all about, where financial services is going to become invisible. It's going to be embedded in what you do daily. So for example, you use Grab in Southeast Asia, you use Uber all across the globe. You don't need to go into your bank account to see your balances. You'll actually click onto your Grab or a Uber app and start seeing your balances. You start seeing your credit card statements, etc. So your life in financial services is going to be completely embedded, and you will not see, and financial services will be brought to you by the apps which you use regularly, but powered by a bank. Great story which is being developed is the Apple Card Goldman Sachs story, where people see Apple as a proponent, but it's really Goldman Sachs who does all the heavy lifting and work. And going back to an important point Melissa made earlier in the conversation, embedded finance is a hot story because the VCs have just given it $1 billion over the last 10 days, and this is the next 5-year plan. So I'm super excited with the whole proposition of how this is going to play out.
Embedded finance. Melissa, I'm going to come to you first.
I mean, embedded finance is not tomorrow's story. It's still pretty much like real-time payments. We're doing it now. Which is great. Like I completely agree with Prajit on how big. I mean, the market is still in its infancy compared to where it can go, and I think it will continue to grow. But the trend has already started. The question will be, at what point do lines get so blurred, and companies become regulated because they're actually financial institutions, versus an e-commerce company or some other entity, or who's going to regulate the fact that somebody is buying FT stock after reading an article or a particular company, and who's responsible for the compliance. But I'm a big believer in embedded finance. I just think we're already well on that trend, and it's not tomorrow's trend, but it's still in its infancy and will grow tremendously.
Yeah, and I think just going back, I think at core you need to believe and see it. Like for example, I'm a strong believer that the largest card issuer in the US is not going to be a bank. It's actually going to be Kim Kardashian, right?
But Prajit, card issuance is so old already. Like everybody issues.
Correct, but
card.
Kim Kardashian or Kylie doesn't issue a card, right? Like it's like, I think that's the differentiator. That it's like look at Mr. Beast, right? Mr. Beast automatically became the largest producer of burgers by just putting out a tweet saying that I have started doing Mr. Beast burgers. Mr. Beast is a very big YouTube influencer, and he just suddenly decided that he's going to, and he created 4 different burgers, put them on DoorDash and all the other food apps, and voila, he had more outlets than McDonald's in the US, right? So that's, in a way, it's not embedded finance, but in a way, that's what the way we see world to go into.
Is this the real reason you're moving to the US?
To eat Mr. Beast burgers.
You must love burgers.
You can see that.
It's a temple.
Amrish?
Well, like the Kardashians, Prajit is a great marketeer. And all that he has done is he's just renamed real-time payments as embedded finance. I mean, who's embedded finance? It's Mr. Real-Time Payments who actually solves for big issues like embedded finance. Go invest into real-time payments, you'll solve embedded finance, you'll solve for, faster money movement. You can do many, many more things. So yeah, right. In real-time finance, real-time payments area, one of the things that we will solve for is delivering embedded finance.
I don't think that's correct, and you being an investor in NIAM, you shouldn't be saying all these things publicly as well. But I think what the whole concept is the unique one, right? Like imagine the power of that concept where you see a block, and I hope it's not a hypothetical, it's a real situation where you have a blockbuster quarter and I'm on Financial Times website and I can buy your stock.
And real-time payments is there.
No, it's not real time. It could be card rails right now, it could be bank rails, it could be any of the rails. Like keep the rails aside. It's the power of the concept. Right. The power of the concept of the
concept is real time.
So what's the difference between that?
It is real time, but it's not the concept of payments. Is like going back to one of the interesting things he said, payments is the transaction layer here, right? The whole aspect of the whole product is not the payments part of it. It's being accessible, it's being available, it's being right there, right time. How many times have we woken at night and said, I want a chocolate ice cream? I generally do, but how many times do we get it? 0, right? But imagine if you can just say chocolate ice cream, voila. That's what embedded finance is. That, okay, we're sitting here and Edith just told me great things about Solana, like I should have a screen here, buy Solana.
You're just talking about instant gratification, which is exactly what RTP is.
No, RTP is a smaller, I think, going back to my embedded finance topic, I'm just going to reverse it.
Hey Pat, let him talk.
RTP is a part of embedded finance. Embedded finance is the bigger envelope.
Now you're just trying to eat all of the ideas in one.
Yeah, DeFi included, yes.
Sounds like you're talking about Star Trek.
Edith, any comments?
Yeah, I have two questions. One is, you would think, which is not that Facebook haven't tried, right? So they were trying to do Libra, which completely just did not work out. And you would think that they probably should have followed the footsteps of Tencent with WeChat, but unfortunately, still not happening on Messenger. That's one. And then second is, let's say, as the Kim Kardashian or the Kylie example, they have to count on somebody else to provide the ability to let them transact. So which means that I have to count on an API or some other companies, and there's a lot of risk there, right? Because now I'm sharing a lot of data across where you can think it's beneficial, but still, now there's another party is involved. So again, I'm going back to implementation. The idea is great, but even the biggest company in the world wasn't successful at all.
I think I have actually a linked answer to that. And one of the reasons why big techs are very cautious on something like this, because in financial services, like Ambrish and I do this day in, day out, when you get fined a percentage of your annualized revenue, right? So like I was just reading the other day, last night, I read the fact that Facebook's going to announce $100 billion revenue quarter. $100 billion, right? So when they're going to get fined for doing something wrong, they are going to impact that 100 billion, which is today's zero financial services, everything related to that. So one of the reasons big techs take a very cautious stand, and that's where players like so many of us have mushroomed over the past across the globe, where we provide the financial infrastructure, we provide the licensing, we provide the card rails, we provide the real-time payments rail, we provide the debit rails, the credit rails, the whole infrastructure. And what you're seeing on top is just the brand, right? So the future, like it's like the Apple Card. I don't know whether you use it. No one talks about Goldman Sachs. Everyone talks about Apple because that's the fronting brand. And that's what our view is. Airbnb will be lending to its host because they get to see the host bank account much better than even their own bank, because they're seeing the visibility over a year, how many people are booking such properties. Uber drivers can get a loan on a Jiffy. I think these are things, or these are concepts. But going back to your point, the implementation should not be done by big brands. They don't understand financial services, and they should let experts like us deal with it.
All right.
That was self-serving.
It was self-serving, but I don't know if that critiques the argument today. All right, I think that is all we've got time for today. So all that's left is to crown the winner. Who are you leaning towards, Pat? What do you think?
I think it's a real close call. But I just want to do a quick poll around the panelists. So you can't pick yourself, Prajit. I know you love yourself that much, but you can't pick yourself. So if you had to pick... Melissa?
Yeah, I have to say that I'll go with DeFi.
Okay. Melissa, Edith, who would you select? You can't pick yourselves.
I really like the concept of embedded finance.
Yeah, I'm a payments freak. So I'm on RTP.
Ooh, this is a mixed
here's
panel.
the funny thing.
Okay, well,
But here's the funny thing.
I think
All of
it's-
these topics were
it's a tough
interrelated
call.
Yes.
in some way.
Yes.
None of them were actually discrete at all.
Correct.
There's a Venn diagram somewhere here where they all cross over in the middle.
There's a Venn diagram, absolutely, but they're not
I drew it. I said embedded finance, DeFi, RTP, CBDC.
I don't think we can make you all winners though. It's really unfair.
Why not? We're in a new world of getting along and kumbaya.
It's a decentralized world, guys. We're all winners. We're all winners today.
There can be only one though, unfortunately. And I think he's going to be unbearable for the rest of the weeks to come. Ooh, but Becca.
It pains me. It pains me to say this. We might need some bigger doors to the studio. Pradyut, you are the FinTech winner today. Stand up and take a bow.
Take a bow.
Great. Thank you so much to all of our panelists here in the studio and also in San Francisco. Over to you, Gabe, to close us for this launch event. Thanks for joining us.
And thank you so much. And with that, ladies and gentlemen, we have come to the end of the stream. But the event has just begun. We're working with the respective ministries to ensure we are able to pilot an offline-online hybrid event experience at SFF 2021 this year.
That's right. This now kicks off our countdown to 8 November, where we'll look to deliver a hybrid event with a range of exciting activities for everyone. Don't forget to register for your pass, and for more details, please visit us at fintechfestival.sg.
And don't forget to give us a shout out via the feedback form you see right now in front of your screen. Your feedback is very important to us. And lastly, from everyone here in the studio, thank you for watching. Take care, and will you be there? Thank you, everybody.